Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. So the markets have bounced here today, second day in a row. We've seen a nice little move up. This is all going into the Federal Reserve announcement tomorrow. Early afternoon, look for the FOMC to announce their policy statement, which is expected to include another cut in quantitative easing of $10 billion. All right, right now they sit at $55 billion in printed money per month. They're pushing into the system. This would take them to $45 billion. Is there a small chance that the market could get something positive? Yes, and that's why the market is moving up into the meeting. People aren't necessarily expecting that they're going to cut anything less than $10 billion or not cut at all, but I think it's the verbiage people are going to be listening to. So what does the statement actually say? Does it say, they're going to be watching closely and maybe stall out on the cuts? And if that's the case, then you would see some continued upside if there's any sort of leniency in the comments from the Federal Reserve. All right, here at InTheMoneyStocks.com, folks, we picked up some longs over the last couple days. One long that my business partner, Nick Santiago, picked up. We took half off the table today on CRM. Beautiful move. Trading here. We made about 5% on this trade in just a couple days. And again, CRM moved beautifully to the upside, hitting first target right here. And his levels are just impeccable. The first target was right here, and we grabbed the money off the table there on the first half and took that. And then again, just placed a stop at break even. So another profit in the bank for members here of the Research Center at InTheMoneyStocks.com. And again, another great trade just added to the long list of winning trades for this year, now totaling close to 180% for 2014. 3.5, 4 months into the year, a monster gain so far. Best start to a year in a long, long time. All right. Couple other things to go over, folks. If we scan through the charts, we go back to the SPY. Notice how you had a beautiful reversal off this low. Anytime you see a reversal on the markets like that, all right, see how the markets were up early and then had this big sell-off, and then were able to fight all the way back? That's a positive signal, and you should make sure to understand that as a positive signal. So to me, that basically put me in a neutral positive bias for today alone, and then ultimately that's what we've seen. We've seen the market float neutral to higher. Notice how the market is staying right around this down-sloping trend line. So if you connect this high to this area right here and just down, you pierced it early morning, and you've kind of hovered around it the rest of the day. And that's going to be interesting because it almost seems like it's setting up perfectly for the Fed announcement tomorrow. As long as we stay right around this level, the question is, do we shoot up through it and go back to the 52-week highs on the S&P 500, or do we see some selling to the downside and see this market come right back in, maybe going all the way back to double bottom? And again, I think for me, the odds are that the market will stay somewhere around this down-sloping trend line, and then it'll kick the can into tomorrow's announcement where we'll get a bigger move in the markets. Volume, you can see, is dying out. We had decent volume this morning, but notice how the volume has died out here, and this is just because all traders, again, are just watching for the FOMC announcement now. I mean, it all comes down to that. All right, a couple key stocks in motion today, guys. 3D Systems, nice move here on 3D Systems to the downside. They reported earnings this morning. That stock is trading right around the 44 level, down a little over 10%. If we go to the daily chart here, you can see that, again, there's a little bit of a double bottom right there that we're piercing. I actually think this is going to go lower. All right, I have a level right around here that I'm going to be watching, right around the $40 even number. Gets to about 40 even number, I'm going to start to get interested on it. I think that, again, there are some opportunities even before that, but most likely the safe swing trade bet is going to be right around the 40 even number for a big time bounce. If you look at this, if you kind of look at this chart over here, right, you had a drop here to 40. It was above 40, dropped to 40, bounced, came below 40, came up here, then consolidated right here, bounced, pulled back to 40. So you can see how 40 has been a key level for a long period of time, and that notes to me that in the next few days, if this falls into 40, that's going to be my bogey. That's going to be my target for an entry on the long side of DDD. I do think it's due for a large bounce, but again, the key is to get the right entry point so you can profit a max. I mean, we all want to profit, and the only way you profit the most is by having the perfect entry point. Okay? All right, a couple other stocks out there that we're continuing to watch here, guys. Let me just go over them. Number one, Apple. AAPL up 50 cents on the day. Not a big move on Apple. That's not why I bring it up. It's because it's moving. More so because it's not moving, and you have to respect it because it's had such a big move up off of earnings. So the stock really has just gotten so extended. If you take a look at where it was trading before earnings and where it's trading now, I mean, you're talking about a $70 plus $75 move. I mean, that's about 15% on one of the largest market cap companies in the world. So, I mean, that's a big percentage move. If you're looking for where this stock is going to stall out and have some resistance, well, you don't have to look very far. And it all kind of comes into focus, or it should come into focus. See this pivot high, and look at where the stock is holding right here. Now, do I think it's a short here? No, there's no way I'm shorting a stock, which was one of the few to rip higher on earnings this earnings season. If anything, I'll look for a bullish pullback, consolidation, time count, bull flag, and I'd much rather buy it, to be honest. I really would. I think you have to realize that a lot of people are so interested in shorting into resistance like this, and you have to recognize the strength of the stock, especially even in comparison to the market, which has been choppy to weaker lately. All right, and you have to respect that. So a strong move in a weak market, especially on a big company like this, what this tells me is you look for a sideways small pullback like this, and then you buy that, and you look for the move up. I think the pullback will take you here. This is what I'm expecting. So a pullback, see this pivot high right here? That should be where the pullback comes in, and you could be a buyer there at that point. What price is that? That price is approximately the 575, 573 area. Okay? So interesting stuff there, folks. A couple other intriguing charts out there. JP Morgan Chase finally getting a bounce. This stock has had a lot of trouble bouncing. Yesterday was down huge, bounced back, still was negative on the day, but today finally getting a little bit more of a bounce. My guess is this has a little bit of potential upside into this gap fill right here and the 20 MA. And then once you get into that 20 MA, you start looking for a short, the 20 MA and the gap fill right there, because the 50 is going to start sloping down. A lot of resistance right up in this range. So if it gets to that point, start looking for a pullback on the JP Morgan trade. One stock I talked about over the last few days to you guys was Yandex, YNDX. That's having a great day today. Good bounce. One of the reasons why I talked about this stock is because it's a high-risk play, but if you will notice here, the stock's down from $45 and hit a low of about 23 the other day before bouncing back to about 25.5. I don't think you go long here. The long play was yesterday or the day before, but the point is, this stock has been crushed, not because the company's not performing. They had great earnings, solid earnings at least. And really, if this stock wasn't in Russia, if it wasn't a Russian play, it would probably be trading near its highs around $40, maybe even 30, but needless to say, not down at 25. So this is a scenario where if everything is start to relax with Russia, if the tensions aren't so strong and start ratcheting down instead of up, you'll see this stock literally have a 10% plus bounce in a day. And it's a big market cap company too, so I mean it would be a nice move there if that were to happen. Okay, so one to watch there. We talked about 3D Systems already. Let's take a look at a couple other names out there. How's Baidu doing today? Baidu's up about $3 after a huge drop yesterday. Sina, S-I-N-A. A lot of the Chinese stocks are bouncing back just a little bit, up $1 and change. And Sohu, S-O-H-U, is also getting a small bounce here after the down day yesterday. Not negating the down move yesterday, but also is bouncing back just a little bit. Other stocks in motion today, we can take a couple looks at some of the bigger names. Facebook up about $2 on the day, 3%, 3.4% gain. Nice move there. Notice how Facebook has not hit target yet, though. I'm telling you right now, Facebook is not done going down until it hits the gap fill in the 200 MA. Then I think you see a longer extended bounce. Until then, I wouldn't even hold my breath on it. Interesting today, we have Twitter earnings after the bell. Right now, Twitter's up 4.5%. Great bounce on Twitter. But again, you have to recognize here that earnings after the bell will dictate. Now, the stock has sold off immensely off the highs, but eyes are going to be on those earnings. And to be honest, I think there's no way I'm putting a bet on this chart either way. I'm not positioning myself with options or with stock either way. But yes, it's oversold. Would I be surprised to see a 5-10% flush on this stock over the next few days off of earnings? No, I wouldn't be. All right, I still feel like the one thing that bothers me about this, and this, if we get bad earnings on Twitter, it could actually push Facebook down into that target range. But one thing to note here, it never pierced this low. And notoriously, you might say, well, what's the big deal? Well, that's a double bottom, and a pierce of that would take a lot of stops out. And charts are notorious for flushing stocks through and markets through key levels to take stops out. A lot of people that are long Twitter will have a stop right here. So if it flushes down and takes that out, I think that's where you create the bottoming volume. If you look over here, right, I mean, here on this dip, you really didn't see that big volume. You don't have the flush, you don't have the capitulation volume on this chart. So, I mean, listen, it could go either way in all fairness, but I'm saying that at some point in the future, they will take it through this level. The big boys will take out those weak hands. They're going to flush it through, capitulate this. Maybe when it gets to 35, I'll get interested as a swing long. I'll keep an eye on it at that point. Okay? On that note, folks, I'm going to bid you all farewell. Remember, come take the 7-day free trial to the Research Center. 180% net gain for 2014 is insane. All right. Again, as I said yesterday, even if you just put 10% of each of your portfolio in each position, you still be up 18%. I mean, we're almost at 20% after the first 4 months in this market. And just think about what the average person's return is right now. I mean, if you just go with what the markets are doing, markets are basically flat on the year. Nasdaq's down. So think about that, guys. I think it's a big, important factor to consider. That's why the methodology is number one. It's served us year after year after year. Last year, at the end of the year, we had a net gain of about 500%, and we're on pace to actually do about 600 this year. So, I mean, just last year alone, 10%, you just take 10% of that and say, all right, I put 10% of my portfolio in each of one of those, you'd be up 50% for the year. We're almost up 20% already for this year, so we're on pace to beat that. All right, come take the 7-day free trial, guys. That's the best way to scope it out. You can take a look at our track record under free market action, and you'll see exactly the trades we've taken this year. Take care.